I started out trading options. I joined a trading group on Discord, which was like a signal service. Got in there, I loaded up my Thinkorswim, my TD Ameritrade account with a bunch of money, and I tried to take all these signals, and I ended up just losing a bunch of money. I did that for about 6 months until my other friend told me that I should really try out futures. And at that time, I didn't really know anything about futures. He just said you could be leveraged. He said that it was way better than options trading, because options trading, you have all these Greeks, all these different variables that can affect how much money you make, whereas futures trading is more like trading stocks, except for you don't need as much money to make a lot of money when you're trading futures. I had to do a lot of research on my own to figure out how to trade futures. I went through a few different brokers. I eventually landed on my favorite one, which is Trade-Evate. Super easy to use platform. I also like to do my charting on TradingView. Trade-Evate and TradingView integrate really well together, where you can do your charting on TradingView and you can also do your trading on TradingView using Trade-Evate as your broker. So you don't actually see Trade-Evate while you're doing the trades. You are just on TradingView executing trades and doing your charting in the same place. Once I started doing futures, I was still in the options group because there was a lot of technical analysis that was based off of like the S&P 500, the SPY. I was charting the ES, so the S&P 500 futures contract. So there's a lot of similarities between the options group and what I was still doing. Even though I was doing a different product, there was a lot of similarities there. And I learned a lot in that group. Eventually, I started looking into supply and demand. I stayed on that for a while, which I think really leveled up my trading because it made me understand price action in a different way where, who's to say if supply and demand zones really work? Some people say they work great. Some people say they don't. I personally don't use them anymore. But what it did teach me was that it's important to wait for something to happen. You want to wait for price to get to a certain area before you start thinking about taking a trade. And for me, that's what supply and demand taught me. It taught me patience more than anything. It taught me to look and then wait to see what happens. And if something happens that you like, then potentially take a trade if you think that the outcome is going to be worth the risk. So eventually, after supply and demand, I learned a lot. I did well, and then I think just like any newer trader, you do well, and then you go through like a bad streak of trading, and you don't think it's you don't think it's the randomness of the market, you think it's your trading system. So of course, just like any other trader, I started strategy hopping, and I would do really, really well on a brand new strategy. And then eventually I would go through a losing streak, and then I would blame it on the strategy. I think a lot of people do that. I think that's, strategy hopping is one of the most common things that happens in trading. And I think it's okay as a new trader to jump from strategy to strategy when you're trying to find something that fits how you like to trade, something that fits your style. But I think you have to kind of lock yourself down into one system or one style of trading to really figure out if you're going to be any good, if you're going to be successful in the trading world. So essentially what I did is I realized I was strategy hopping. I realized I wasn't giving myself a good enough chance to be successful with anything because I was just jumping around too much. So I just threw everything out the window. I took all the indicators off of my chart, and I decided I was just going to go to simple support and resistance. I use a 1 hour time frame to find my support and resistance zones. Before the market opens every single day, I look at a daily chart and I try to identify if there's an uptrend, a downtrend, or if we're in a ranging market. I go to a 1 hour time frame and I identify the same thing. If there's an uptrend, a downtrend, or if we're in ranging market. If the daily and the 1 hour are in line, then I tend to bet a little bit bigger if I'm trading in the same direction as that alignment. If they're not aligned, then I tend to be a lot more cautious with my trades. But overall, what I'm looking for is for price to get to my support or resistance areas, and then I look for price action patterns on a 1 minute chart, and I stick to just a few. I usually stick to a bull flag, a bear flag, head and shoulders or inverted head and shoulders, and wedges. And usually that's pretty much all I ever do. There's definitely some discretion involved. Like, I'm not gonna sit here and say that my trading can be put into like a computer or an algorithm. You can just press a button, it's going to work. But I think that's a lot of where the risk management comes in. Some traders can design a computer system to trade for them and they're going to be successful. Other traders are more discretionary and they're going to be successful. But I think the thing that kind of binds us all, you know, the one thing to rule us all is that as long as you don't lose more than you should on any given trade, you're going to be around to see the next trade. The money will come if you are able to stick around. But if you go blowing, you know, your account or your whole account, half account, whatever it is, too big of a portion of your account on every given trade, you're not going to be around to see the benefits of the extremely profitable trades.